Hi everybody, Maria Boyles with McCarthy & Acres, McCarthy Acres Tepeyac Title, coming to you today with some tips and tricks and information about deeds and ownership. First of all, I want to talk to you about the difference between general warranty and the special warranty deeds. As you know, your deeds is what transfers your title, transfers ownership, or really an interest in real property. The general versus special warranty concept really comes down to the general warranty is where your seller guarantees or promises to the buyer that the title to the property is free and clear from any of the defects or encumbrances. This is different than the special warranty deed. This is where the seller guarantees or again promises that the title that is being sold wasn't impaired during the actual time that the seller held title, but they don't make any insurance about the previous owners. Then really a third aspect to this is a quitclaim. This is where then the owner really only transfers whatever interest, right, or even title that they have in the property, making no warranties as to any defects or encumbrances in any sense. This all then kind of ties into a concept of tax exempt deeds. The Code of Virginia allows for several types of deeds to be tax exempt. The most common one that you may have seen or come across is your deed of gift. This can be anything from a gift between family members or even strangers if they decide to gift a property or an interest. But even adding a family member to title after somebody has purchased a property is often when we see this. And a different type or aspect to tax-exempt deeds is just straightforward, a tax-exempt deed, even having some consideration involved. Imagine between a religious body or government entity that then transfers title. Even the best example that we often see is between an LLC and a member. So a person buys a piece of property, has this real estate, and they'd like for their LLC to be the one that actually has title to it. So this is where a general or special warranty deed comes into play, but then that it would be tax exempt and so that there wouldn't have to be any additional taxes paid on it. Really, if you think about the concept of that in the sense that they already paid the taxes on it when they purchased the different types of tenancies that you can have and that's offered in deeds. And so you have your tenants in common concept first. That's where at least you would have more than one owner. The owners can have different interest, and so for example it can be 50-50 or it could be 60-40%. Imagine a different variety. This is also where your client then can sell a portion. So one owner could sell their portion of the rest can sell another, and so imagine the owner then having multiple owners, that is by tenants in common. The concept then that you would want to keep in mind, especially for you listing agents, is that all owners that have an interest as a tenant in common concept does have to sign your listing agreement have to sign your contract. And because if they don't do that, you can't transfer the full title, full fee simple title, I should say. Then the next concept then is your joint tenants with survivorship. This is a great tool for anybody who purchases it, obviously more than two people buying, and you can imagine family members or anybody that has some type of relationship that would want, when one of them passes away, the title automatically goes into the other at the point that they pass away. No need to involve the probate, no need to involve early to any to state law for intestacy or to look to the will for testacy purposes. The last concept then is your tenants by the entirety, which is only available for a husband and wife. And I alluded to this earlier. That is something that somebody would want to take advantage of, and changing the tenancy if they bought the property, not holding the property and in a tenancy by the entirety concept, maybe just as joint tenants. The tenants by the entirety is a protection, like I said, only for husband and wife, but the concept being that the creditors would have to attach against both the husband and wife and not just them individually. Again, just like with joint tenants, this is where if one passes away, the title automatically goes and vests over to the other one. So if you have any questions or want to know more about that or get information, give us a call at the number below on your screen, and we would love to share a little bit more about that. Thanks for listening.